who participated, who participated in this event. Professor Whiteley approached me and asked me if I can contribute a chapter to the book, an analysis the next 5 years. Professor Greg knows that I'm a man of cycles, so I took an advantage and an opportunity to further my research into the US market, S&P 500 in particular. And the type of research and the type of cycle that I've analyzed is approachable 5,000 years of data, and all in all 12,000 years of data that I and we cycle readers chop into various sections. This chapter in particular is an analysis of global economics and geopolitical trends that will shape the next 5 years based on historical cycles and market data. And why is it important? Because you want to know where you want to put your money. And that's what I do. The first cycle that I brought about is a historic 100-year war cycle that started in 2020. It's something that we cannot escape. It's something that has happened more than 5,000 years now. And it characterized by few major campaigns that will last approximately until 2050. The first campaign started in 2020, which I guess in retrospect, COVID will be considered to be an act of war. And the current campaign of conflicts should come to an end before 2028. We've already seen some peace agreements signed, and so it's fair to say that Russia-Ukraine will end in the next year. But this will be short-lived. Ongoing geopolitical and instability warfares will continue into the 2030. And there will be some major implications on trade, investment, and alliances. And we can see these alliances reshaping these days. When we're looking at war budgets, we hear major statesmen declare that they are increasing their budgets and they're heading into war. So it's interesting to see how this whole thing evolve. It is unfortunate. No one likes war. I hate war, but this is certainly the projection. The other thing that I wanted to discuss is the US dollar, the Dixie. It is the main currency in the world. It is the reserve currency, and it's really strong, and it will remain strong. But it remains strong in a time where commodities are on the rise, in a time where stock market is on the rise, and normally it's impacting currencies negatively. But the US dollar is well needed all over the world, and in third world countries in particular, where their debt denominated bonds are priced in US dollars. So the world still needs US dollar. There is shortage of US dollar in circulation in the world. Can you believe it? And we are expected to see continuing strong dollar until 2030, and we can look into it later. What happened in 2020? It's also a major shift, a historical shift in interest rates in bond. It's a secular shift. I can't go beyond 1990, but from 1980 until 2020, there was a bull market in bonds. Bull market in bonds means dropping yields, lower interest rates. And as we can see from 2020 onwards until now, interest rates increased. This increase is forecasted to persist at least until 2035. And we're looking at mortgage rates that in the States, it's all predicated in the United States in the US economy, will increase up to 15% by 2030. What we're looking is inflationary pressures. It will persist. What started in 2020 and we're experiencing these days will persist. And we're going to see the government debt's reaching unsustainable levels. And historically, when that happens, it's impacting other economies because there is a say, when the US economy catches a cold, the world catches a flu. And so it's something that will carry waves across the world and across global economies. The other aspect in an asset class that I want to discuss is commodities. There is a reason why gold is here. Gold is shining. Gold is shining bright, and I'm going to show you a chart later on at all-time highs. And so in inflationary periods, prices of commodities increase. And so it's something that we have seen thus far, and we will continue to see into the 2030s. There will be a turning point. There will be a market peak, and I will discuss this market peak. This market peak will be a great opportunity to accumulate and purchase these assets. And these assets will be extremely expensive in the 2030. There will be a market cycle that indicates full-fledged bull market by 2027, and we will discuss what's going to happen in 2027. The other aspect that we need to consider is the Trump factor. My research, and I know that my research may not be popular, my research shows that, and by the way, I'm apolitical. I'm completely apolitical. That President Trump, history will show that he was the greatest US president in the past 100 years for the United States of America. We're looking at substantial increase in domestic production. In the last 10 months, investment in the United States in the order of $18 trillion. You must understand that we're looking at economy on the order of $32-33 trillion. This is enormous. Tariffs and protectionism, yes, it is inflationary, but we can see the type of revenue it brings into the United States of America. In terms of government efficiency and tax cuts, he's done it all. Donald Trump also done something that we didn't think that we'll see in the United States. He started the USA Sovereign Wealth Fund to capitalize on unmaterialized assets in the likes of gold, cryptocurrencies the United States of America has a lot of, and we can see the United States also pumping oil, being the world's largest producer of US oil. That means the future generation of Americans will enjoy these great investments. And also new trade routes. President Trump understands very well that China has been doing a great job with the Belt and Road Initiative, and he's tried to counter it. He signed agreements with Prime Minister Modi of India, and we are about to see new trade routes that will take material and goods from Asia, from the East, via Israel and Europe. And that will open a new trade route that America will enjoy it a lot. So why are we seeing a sea of red in 2027? Because in 2027, there will be a turning point. My research in the cycle of asset classes shows that major asset classes are expected to bottom out in 2027. And that means that we're looking at the S&P 500 will shave at least 40% of its value. And when S&P 500 shaves at least 40% of its value, 11 sectors shave a lot of percentages as well. And we are looking at major bottoming of major asset classes. But don't be phased. That means that we are entering a new accumulative phase. It's a great time to buy. It's a perfect time to buy because you want to buy when the market is at a discount, not at a premium. And now we understand that after that, commodities will correct as well. Commodities will correct as well. But commodities will run into the 2030s. We're looking at prices of gold, silver, palladium, oil, rare earth will reach new time highs. So what does it mean? I started writing this chapter in January of this year. This book was published in March of this year. So S&P year to date, in the month of March, S&P was at about $5,500. Now it's at $6,700. So I was right there. When we're looking at the price of gold year to date, in March, when the book was printed, the price of gold was $3,000 an ounce, US dollars, of course. Now it's at $4,300, $4,400 an ounce. Not too bad. Imagine yourself, Professor Greg, if you put some money when I wrote it. Let's look at silver, sir. Silver in the month of March, $35. Now it's at $50. Not too bad, eh? Imagine yourself, you had bought silver miners. It would be fivefold. And when we're looking at 10-year US bonds, which is the parameter, overall, still in a channel. 4% in March, now it's at about 4%. So even though prices of commodities and prices of equities are on the rise, normally bonds should correlate negatively, means that rates will drop. That's not the case, because we know that the USA of America still needs and issues a lot of debt. And USA debt, crazy as it sounds, still considered to be quality debt. And Dixie is the dollar index, even though gold went up 70%. Silver nearly doubled, nearly 100%. Dixie, the dollar, is at about the same, 102, and now it's at 98. Shaved maybe 2.5%, means that the US dollar is very, very, very strong. Still high demand, high need globally for US dollars. Ladies and gentlemen, dear professors, if you have any questions, you can reach me directly. That's me with a bit more hair and beard, but I'll be glad to discuss things further. Thank you so much for your time. Questions?
Thanks, Mordy. That's great. We've got a bit of time up our sleeve, so we will ask a couple of questions. Just making a comment though, for those who are online and also for those present, Mordy's just finishing off his DBA, and Tom is working with him on the supervisor. And I've read a lot of Mordy's work, and to this day I still have no idea what he's talking about, except to say that it's all about cycles and trends. And so far, Mordy, you've been spot on with all your predictions. Every time I listen to you speak or read anything you write, I automatically go to my superannuation account. Because you did promise me that things are going to be okay. So thanks for that, Mordy. I was talking with Dimitri, who's sitting beside me, a good friend of ours in Hong Kong, Rob Ellis Geiger, did very well in cryptocurrency. But you were just telling me yesterday that he's now invested in silver. So he's obviously onto something, because these are your trends. You're showing us these big issues.
And you know what I'm kicking myself about is he advised me to put my money into silver, and he was advising me for the last year and a half, and I didn't take advantage of the opportunity. And I've not only watched it, I saw last night there was a 7% drop in silver and 9% in gold of that little latest rush that there was. But it still has increased significantly. So yeah, Rob is,
Yeah, absolutely. But the professor, good to hear from you. Good to know that you're in London. Yeah, silver shaved 10%, but nothing goes up forever. As Professor Greg mentioned, it's a motion of contraction and motion of expansion. I build my cycles on a blog named Fibonacci and other great indicators, so it's very, very accurate data. Silver may continue go down a bit further, by the way, because silver is not a currency. Silver is mainly required in industry, in manufacturing, whereas gold is considered to be more of a currency. However, when you're looking at the silver-gold ratio, silver is still considered to be cheapest chips.
undervalued.
Way undervalued.
So, may I ask a question?
Yes, Beth. Nice to meet you.
Fantastic. Shalom Alechem.
Shalom Alechem Shalom.
Thank you. Can we get some exact specifics of where to invest today? Because with this whole thing,
Yes, yes,
with
not a
this,
problem.
but in specific, talking about this whole thing in Australia with the what they call rare metals.
Rare earth,
Somebody help
yes.
me. Rare earth metals, that's right. So any tips?
Yeah,
As
absolutely.
this is an in-house discussion. Wait,
Yeah.
I need a pen.
Yeah, it's okay. Rare earth is underpriced. We see there are major
Yeah.
agreements signed in the United States of America. The funny thing is, Beth, that rare earth is not so rare. It's actually very, very common. The problem is the processing of the rare earth. So the best way to
It's
go
so
about
expensive, yeah.
yes, ma'am. The best way to go about putting your money investment in a market is to have a well-diversified portfolio of uncorrelated assets. So you're looking at approximately between not more than 15 to 20 equities that you want to buy. Uncorrelated assets, that means that you may want to buy some banking shares. You may want to buy some shares in technology, or maybe you want to buy some currency, or maybe you want to buy some real estate shares, uncorrelated. And this will promise you a healthy portfolio. But Beth, what you will need to do is keep in touch with me, because then what you basically will need to do what we call a sector rotation. So in S&P 500, you have 11 sectors, and not all sectors go in tandem up and down. So when a sector goes down, and we can analyze which sector will go down, that's when you sell it. You sell it at a high, just like those who sold silver at $52 an ounce, and silver went down 10%, and they're buying the bottom now. So you will rotate funds from that sector to the sector that. Now I know you asked me a specific question, and I may have given you a broad answer, but I don't want you to lose all of your money in investment. So the best way to go about things is to compound your profits and your dividends, and have it in a responsible way, rather than having a year where you gain 290% and the following year you lose a lot. Because what happens, Beth, is really, really interesting. And that's my last point. If you buy a share for $10, let's say you buy Intel, and let's say the share dropped 50%, now it's worth $5, right? How many percentages do you need to increase in order to go back to $10? 100%. So it's not that easy. So imagine yourself, if we lose in a market 50%, in order to break even, we need to wait until the equity will gain 100% from where it's at. So ideally, we'll make the right decisions in the right time, and we'll sell when market is high, and we'll buy when market is low.
That's awesome. I was thinking more like insider trading, but it's okay.
But Beth,
thank you.
Don't be afraid to buy low. When there is blood on the street, when everything is red like that, and everyone is fearful, and everyone don't buy, that's when you want to buy.
Yeah, but it is cheap.
I did not expect this at this conference, but thank you, Greg.
Mordy,
yes, sir.
I'm in Melbourne.
We're gonna make it happen, Beth.
You've taught me many things, and one of them is to sell high and buy low.
Yes.
Yeah. Absolutely.
If only I knew what it was.
We can identify market peaks, Professor Greg. Market peaks are identifiable. There are certain patterns. When data is analyzed for such a long period of time, those patterns are second nature, basically.
Can I just say on behalf of everyone listening that you should seek specific financial advice from an expert. This is a talk about academic, and nothing more than what it says. May well be true, but should not be construed as full-on financial.
It's not a financial advice. It's a market analysis that I have conducted. It's part of my doctorate, but it's something that I've been doing with my clients for the better of 20 years now.
I know, but we have to protect ourselves against anything that might happen.
Yeah. It's not a financial advice. Don't believe me. It's all rubbish. Yeah.
We all read the disclaimers.
Yeah.
Alex,
Yeah, so we have an identified ongoing risk about China and Taiwan, which informs all of our decisions about what decisions we make in that region and when and what we would do. And that's been said to us that it is potentially going to be 2027 would be the point. I'm not sure how that fits in with your cycle, but this is going to be extremely quick, which it could be.
No, normally, Professor, with financial cycles, we see geopolitical cycles too. There is a reason, there is a panic in the market, and hedge funds just blow up just overnight. So I won't be surprised. I won't be surprised when we see major war cycle while we at. And Taiwan is a country that all eyes are on Taiwan. And I mean, let's face it, China is not engaged in any war, allegedly, yet. Haven't been engaged in war for so long. But in semiconductors, it's going to impact Taiwan as well. Absolutely. Absolutely. We see a lot of semiconductor production will be made in the United States of America. And looking at AI, we're looking at major solar farms that will power these enormous AI machine that the United States is investing in, because they know that they are behind the 8 ball when it comes to China and its AI technology.
But I mean, in UK higher education, the risk is that the incident happens, the UK makes its position, and all of a sudden Chinese students cannot come to the UK, and then overnight there's a hole in the UK HE finance. So no UK institution wants to be overly dependent on Chinese students, so they're trying to find, that source. Yeah. But at the same time, they would like students that are
It's an interesting question when it comes to the UK and Europe. My research is in the United States of America, but you cannot ignore Europe. And with the dollar index, the euro has a 20% weight. Europe is in big trouble, sir. Is in big trouble, financial problem, political problem. And when spoke about it with Professor Greg, unfortunately, when Europe is weak, historically, bad shit happens. Sorry for my French. So I hope that Europe will be strong. I hope that England will be strong, but historically, because I'm relying on historical patterns, that's all. Yeah.
thanks, Morty. Just to finish off, can you go back to slide 2 with the bull?
Yeah.
Yeah, that one. I think I may have shared with you, for others, the bull has been relocated. It's no longer out the front of the stock exchange. When Morty was there last, it was at the front, correct?
It was, definitely.
They've relocated it around the corner, apparently, for the most bizarre of reasons. For this one? Some sculptor did a sculpture of a little kid. I think it was a little girl, little boy, I can't remember. I think it's a little girl. Just think sort of on the thing. And the community were very concerned that the bull was too threatening to the kid. So they relocated the bull. I think the bit they missed was they're both freaking statues. But anyway, just a bit of trivia there. The bull is no longer out the front. It's been moved around.
That's insane.
Yeah, so how about that?
It's going to trigger the statue of a little girl.
That's right.
Oh.
So Morty, thanks a million as always. By the way, Morty's written a lot of stuff. It's available on musicum20.com under blogs, quite a few papers, and all around those kind of issues of trends and so forth. Tom is wanting to reinforce the fact that this is not financial advice. I agree, but the papers are well worth reading.
It's very interesting.
Even though, Morty, I have no idea what they're about, they read very, very well. So thank you, Morty. We're going to go for lunch, so take that. But I do want to say hello to Beth, who's in Melbourne, who's joined us. Beth is presenting tomorrow morning, our time. I don't know what time it is for her. Irene, thanks for being with us this morning.
So late.
Throughout. for you late. And Hadass, as always, thank you very much for your interest and support. Appreciate it. And Mordy, big question. Is that a real backdrop behind you, or is it an AI generated one?
It's my heart. It's my heart. My heart is for Australia. It's a backdrop. It's a backdrop. I do have a couple of flags of Australia here as a great patriot, you know me. But it's a backdrop. Yeah.
Yeah, but it's very effective because when we're selling, it really looks like you've painted the back wall, which would really make it. Which would really Tom. Tom and Mordy have a unique relationship. Tom is Mordy's doctoral supervisor.
I'm a lucky man.
Thank you, Mordy. Appreciate it.
Thank you, gentlemen. Thank you, ladies. Ciao. Thank you.